Hey guys, so this has been the video I've been trying to make. Um, it's going to be about how to identify the crucial price levels and how to react, how to analyze price action when we get there. So right now Nasdaq is trading after hours on Sunday, and we will use that as example on live because it works it works the best on live. So let's see what we have here. So first of all, on the left, I have a 5-minute chart. Here's the volume profile, the Trident algo, and the delta volume ticks that I use to analyze price action. So what I look for is basically if we go to Nasdaq on the 5-minute. First thing is I can see there is a double distribution from 14,200 to 13,800, and the distribution from 13,800 and 1400 is traded more frequently than the volume is traded more frequently than that of the 14,800 into the 14,200 over here. And how I identify crucial price levels is by looking at the past resistance is now the new support, or the past support is now the new resistance, as well as distribution gates. What is a distribution gate? A distribution gate is when, okay, let's say here is a distribution and here's another distribution, and that little gap in between the low volume node, that is, you can consider that a distribution gate. Those spots are usually a a reversion a reversion tactic. You can try to reverse here, and if it goes down, comes down here, you can try the long here, depending on price action. If it doesn't work, tight stop right here. But also another thing is the entry to distribution is on top, like the top 15 percent of that distribution. So probably like right here and the bottom of that distribution. So this one would be around here. So those distribution gates are really hard to break, but once we break, it's going to go that way. So for example, for today, Nasdaq, it dropped to the probably like the lower 10% of that distribution gate, and then bounce back. I mean that distribution. Another thing is, let's say scenario, we that is the support of that drawdown right here. So what that means is later on, if we drop below that level, it's going to be the new resistance. And I always use the body to have a good measure of price. So for that, it's 13,856 on Nasdaq. Now, if we go back here to today, the drop below to 1368, and you can see that we are seeing a resistance right here. The past support level will become the new resistance right here. And how do we determine whether or not we choose to utilize that price? Is so basically, for example, and a war, there are battles, there are key points that both sides need to take in order to win the war. So those spots that we call crucial key price levels, whatever, are the most important battles that you need to um, gauge whether or not you want to, which side you want to pick. Now, if we come back to the 15-second chart, so it looks like it's still struggling to break that resistance right there. I use Heikin-Ashi candles because it's easier to identify. It's less choppier, and it's also easier to identify trend reversals. The candles is just it's easier. So let's say here, when we got to 13,880, from what I see here on the delta ticks, this is available on the chart copy that I posted on Twitter. That means there are more sells than buys on this candle on the 15-second, and it signals the first sign of weakness. And usually when volume is significantly high on that specific candle, and that specific candle, the wick of that candle is rather top ticking or low ticking, it indicates that most of the time it's that is the top or that is the bottom, meaning there is a really big wall of buy or short orders, sell orders. And you can see those two candles, especially this one, the top for now, that the volume is significantly higher. Let's see if we can find another scenario that's so right here, or we can go to QQQ. For example, QQQ last Friday. Okay, not last Friday. So QQQ last Friday, on that little reversal or the reversal from the bottom, we see a little, okay, look. First, that was the resistance met, right? 340.20 about there. Broke, I came back down, broke. So we made a new high over here, 341.82. So when that came back down a little bit, we could use the past resistance level as the new support. So the 340.20 is the new support. And when we take a look here, is the bottom of that 3-minute candle or that drawdown is 340.07. Okay, so we're playing this off of a previous level. So if you use that level 340.20, the previous resistance as the new support, you would bottom tick that one. Now again, same scenario right here. That the resistance right there, right? 341.80. When we broke 341.80, we went to 343.60. Now there's another drawdown from there, and the bottom of that is 341.90. So another, you would have bottom ticked right there, past the resistance right here, new support. Okay, those are the key important levels we want to keep in mind of to keep playing off of it. So again, right here, 343.60, right, broke new highs, came back down, 343.57, bottom tick, right? This is key you have to keep in mind of these price levels, and whether or not are you seeing a strong buying when it gets to the support, or is just straight up selling. And those you have to use experience, screen time. My secret sauce, people ask me what's my secret sauce. My secret sauce is screen time. Straight up spend time looking at the market, spend time back testing, spend time just going through stuff, and most important of all is having the conviction to execute that trade. And the number one helper to help you have conviction is by having correct sizing. Once you start sizing too big on trades is when you start to lose your conviction, because you're so tied up into, oh, this trade is not going well, it's going the other way, but in reality it's just panning out at the second. So always size appropriately. And about sizing, you can go to my channel. There's another video called Position Sizing and Compound Growth. Strongly recommend that you watch that, and a TTPP as well. You will never want to let a green trade go red. That is the number one reason why a lot of people start to get frustrated, lose gains. The key of the game is to have fun while you're doing this. Once you start having fun is when you start compounding the gains, and when you start not worrying about how much I'm up today, but rather is what a trade that was, what a bottom tick, what a top tick, those are like the key emotions that bring you to successful trading. There's not a lot of volume here after hours, so it's not really the best example to show the price action on the 15-second, but that is the closest you can, sometimes I'll hop on the 5-second to look at exactly what it is, but that is like the putting the market under a microscope. Again, the chart layout, it's there for everybody to use. It's in the PowerPoint or the Google slide I posted earlier. that's it for now. And if you have any questions, um, comment it under, like, subscribe, whatever. Don't really care. Yeah, that's it. I hope you all learned something in this video, and there will be more to come. Peace. Have a great night, great rest of your Sunday. I love you.